Hey friends, welcome to another weekly outlook of markets and profile from the team here at TRADEWITHPROFILE.com. As we look at a pretty significant week ahead of us, we've got FOMC, we've got the talk everyone's going to be talking about is rate cuts, and then we have triple witching on Friday. So my name is Josh. I'm the founder of Trade the Profile. We're a skill development firm. We come alongside developing traders or traders that have been in the industry for quite some time and are looking to hone their edge. And we use the profile as a way to organize auction information and then help us build narratives so that we can express and look for what we'd call a 4-question playbook trade. So this is part of building that narrative. And so we look at weekly and daily narratives. And so today we're going to look at the narrative for the coming week, which is a pretty consequential week as we get ahead looking towards this rate cut. And that's where we're going to start. So I've got here, I pulled up the CME's FedWatch tool. So if this is not in your arsenal, it's a great tool to have. It's totally free. You don't even have to have a login to be able to see it. And you can see what are the probabilities of rate actions by the Fed at the next FOMC meeting. And you can see right now that it's about split. So you'll hear people say, hey, we're going to get 25 basis points cut. Here, we're going to get 50 basis points. Well, right now, a little bit higher probability we're going to see 50 basis points. It's 100% probability right now that we are going to ease. So if you see that up here, 100%. So the expectation that no one has is that we won't see any easing. So definitely expecting easing. Is it going to be 25 or is it going to be 50? Right now, looking more like it's going to be 50. That's something to bear in mind as we go ahead. So that is the big thing that we have this week. Let's look at the rest of the calendar just to see. We've got Asia on holiday, China's on holiday Monday and Tuesday. That might probably not going to mute anything any more than the fact that we're in contract roll is. We do have some retail sales, inventories, bond auction to watch out for. We've seen some pretty good movement off of treasury auctions. Crude oil on Wednesday, that's typically muted by FOMC, and then you can see the FOMC. So we'll have the statements released, and then Powell will do his press conference about 30 minutes after that, and that will likely take us to the end of the session on Wednesday. Then Thursday, jobless claims, home sales, manufacturing. We do have the Fed's balance sheet. And then on Friday, we have ECB's Lagarde speaking, likely not a market mover, a Fed speaker, but more importantly, we have triple witching. It used to be quad witching. It's triple witching. And that's where we're rolling officially from the September contract into December. Now, that roll has already started to take place. In fact, when we go look at the charts in a second, we're going to be pricing everything off the December prices. Monday is the final official, all of your platforms should roll up to December on Monday, but you could still trade in September. There'll still be about split volume. It may be half and half to start the session, but by the end of the session, it'll primarily be in December. And then by the time we get to FOMC on Wednesday, it'll all be in the December contract. So just kind of know that that's still in play, that you could be trading September all the way until Friday. So just watch out for that with your platforms and make sure you're trading the contract that has the most volume with it. Okay, back to this, and let's look at the charts, and let's start talking about what we're looking for in the S&P, the NASDAQ, the Russell, and crude for the week ahead. And also make sure that you get a copy of the quick sheet. This is the kind of the key reference that I use. It kind of sets the stage for what I'm looking for in the week ahead. And it's a key reference in terms of expected ranges, what's the posture of the auction, and so forth. So let's look at the ES, and let's just kind of roll back the tape on what we were expecting last week, and then what's the view this week. All right. So we started with a one time frame lower week from balance, and closing on the lows on non-farm payrolls. The expectation coming into this week was that if we opened in range, we'd see early higher prices, would ultimately lead to new low prices. Looked like we were going to get that on Wednesday, and yet mid-session we saw a significant change in the options market. There was also movement, a lot of it in NVIDIA, a lot of it. And that led to a reversal that then carried on for the rest of the week and took us back to the scene of the breakdown. So we've effectively canceled the non-farm payroll sellers with the CPI buyers, and that took us back to balance. So you can see that's what's happening here. Price is here, 20-day is here. Now the 5-day is down here. Very quickly and early in the week, we're going to come back. So we're essentially back to balance. Be very unlikely that we'll get significant higher prices without pulling the 5-day up. So watch for balance here. And that's essentially what the play is going to be for the week. is that we will look for balance early around 5,700, let's call it, and then we'll look to see where we move from balance if we pull the 5-day up. If we pull it up and we move higher, it's absolutely possible that we could see 5,800 this week. That's totally doable. Within the expected ranges, and if we're in balance at that place, be on the lookout. It's also possible that we could move back toward the prior weekly point of control, back down here around 5,550. So whenever a market's balanced, look for moves from balance, and not expecting to see a significant move until we get to FOMC. That may come on Wednesday. That may actually come on Thursday. So just be mindful of that as we get out there. But we do have a shot at making new all-time highs this week. And also paired with that, if we go look at where we are from the VIX curve on the SPY, okay, you can see we're also almost back to those all-time highs. We kick saved off of the trailing VWAP and this area of balance. So now 545 is key to watch the downside. We're coming into the week really complacent now. We had a little bit of a flip in the vol going into the CPI, and that we had a lot of people going to the calls. We're back to complacency. It's been quite a dance in late August and September. Look for that to tighten up as we get into FOMC, and that tightening might actually be the fuel that takes us significantly higher. It is also possible, and this is something that I'm watching out for and has been part of the narrative that I've been looking at for this year, is that this FOMC will be a sell the news type event. So this is my roadmap for the year. You can tell how effective that's been. We're above the expected high of the year still. This was the expected high of the year. We've dipped below that. I had expected that we would be turning lower at around this point. That could still start and happen this week. Over the year, the expectation has been that we would see rate cuts. And so we've seen higher prices because often there's a correlation between rate cuts and it's an easing of the Fed, and so we get higher prices. Well, we've had higher prices and no rate cuts. So in that case, it sets us to be more susceptible to a sell the news type event. So be careful of that, especially if we get a blow off top off of the rate cut, if that doesn't reverse back lower, because we still have this little thing out here called the election that is none too favorable, and we have been definitely watching, and this is another stock to keep watching because it's the one that's driving just about everything, and that's Nvidia. They did get back above the last earnings VWAP, so that's going to be a key price. So keep an eye on Nvidia around 114. If they can get below that, that opens the door to the downside. As long as they stay above that, I think they can actually help keep everything higher. So watch that as we get into the week ahead. Okay, so that is the ES. Finally, for the ES, let's just talk about Monday, okay? Because we're going to be coming into a new week, and we have a naked point of control back here. We have value significantly lower, so we're going to be looking actually for some balance. If we see early higher prices, there are some singles up here that we could click. But in any day on the kind of my plan is, what happens if I open in range? What happens if I open out of range? What happens if I challenge the direction? So we're one time framing higher. Buyers are in control, even though they've been not pulling value with them. But we're watching 56.90 as the key pivot. That should lead to higher prices toward the 57.25 area. If we open in range, look for that push higher. If we open out of range, look for attempts higher that then fail and return back to 56.93. And if we're able to get below 56.80, then we could go back down here and clean 56.60 and get that naked point of control, okay, as part of the cleanup. So that's essentially the plan for Monday in the ES. All right, now let's look at the NASDAQ and see kind of what we expected last week. It's going to be very similar to what we expected in the ES, so I'm not going to rehash all of it, but you can see early responsive, look to try to go this way, and then instead back, cleaned up some prior singles, and is now back to balance. We did leave the 5-day lower just like with the ES. When we go look at the weekly chart, okay, it's a lower high that we made for the week. Actually an inside week. So, watch the higher the low. Given the magnitude of FOMC, we could see an outside week out of this. So we will likely be balanced around 19,900-ish coming into FOMC. So, if we go early, higher in the week, look for balance to pull the 5-day higher. So be careful chasing higher. If you want to be long, look for early liquidations or liquidations first before going in that fashion. That will actually be the plan for Monday. I wouldn't think about being long unless I saw sellers. If we open in range, look for early liquidation that then gets back above 19,760 and then pushes to the last month close and pushes actually to, could potentially make new monthly highs if we can get above 840 or 943. If we open in a gap, if the gap fails, we're going to head right back down here to 761 again to balance. And we could see and challenge the bias if we can accept a below 700. There is a door to do a little bit of liquidation. However, looking for any early liquidation to be then bought later in the session. So we're primed for a liquidation break. That's when you see selling that you don't really get a chance to be part of. But that is typically a buying opportunity if you can be patient. Okay, so that's what we're looking for in the NASDAQ. Overall in the week, again, looking for it to be balanced by the time we get to the Fed. Not as close to the all-time highs as the ES, but if they get up here, it could easily make a move back to the July point of control around that 20K. That could be the move. If they're below 760, could very easily make a move back to 19K. So that's how wide it could be this week. Just be on the watch for that. Okay. Finally, the Russell, as far as equities go. Let's get this chart. Okay. We were expecting lower prices. We actually did get lower prices to start early in the week, but then we returned back to 2120. And then we saw the ramp come later in the week. That took us back to the scene of the breakdown. So, if an auction can't accept away from a place like that, it often retraces back. Some gaps are in play here. You can see the very impulsive structure. So be careful against chasing anything higher initially in the week. Where are we overall? Okay, if we look here at the week by week kind of idea, this is essentially a move from balance. So we're pushing away from balance. We came back to balance and now we're pushing away from it. See if that can get us up here and we can hold around the 2245, 2250 and pull value with us. Otherwise, it will again be a reversal back down to value and then see if they can't explore further lower beyond that. On a monthly basis, it's an inside month. Okay, so watch, we're watching last month's high and low. It's an inside month. As long as we're above balance, path of least resistance is to the upside, and that would give us new monthly highs. Certainly the idea of a rate cut could more benefit the Russell stocks than anything else. So keep an eye out for that. And then as far as Monday is concerned with the Russell, definitely not one that I want to chase higher. If we open with a gap, one of my playbook ideas is a 3 rev. So that is where we've had 1, 2, 3 periods or 2 periods in one direction. We're looking for the next one to reverse, and it's a reversal to pull value higher. So here's the node that we need to do some work around that 2203, 22.5. So if we fail early, we're going to come back down here and balance. That then becomes a pretty probable short if we can get back in range. If we hold the gap, we can continue to push higher. We do have decision levels higher at 22.23 as well as 22.33 and the prior month close at 22.44. If we open in range, look for early liquidations to be long back to that point of control and then to new RTH highs. And unless we can get below 21.90, then we could see a little bit larger liquidation. So be mindful of that. And then finally, as far as products we're looking at kind of day in, day out, crude is the last one. It was a week of holding value and accepting value. They pulled 5-day lower, held below this balance area. And so now we're equal to the 5-day, but below the 20-day. If we're below 68.80, we can easily make new lows. So that is definitely a possibility. If we can get above around the 71 area, then we could go between the two postures, and then the auction will be looking to balance. As we look at what happened later in the week, we did have EIA, and EIA was the catalyst that took us back higher responsively. Again, that could continue to push higher so long as we can hold that 68.80. Now, on Friday, we had a neutral extreme lower day, so that's going to set the stage and expectation for lower prices early on Monday, unless we can get above 69.50, and then we could rotate right back up here. So if we're below that, expectation is that we would go clean up this naked point of control around 67.67 before rotating back. And if we don't stop here, then we could push even lower. If we're in range, watch for some chop. And then again, if we can get above 69.75, we could challenge Friday's high and start making the move for new weekly highs. Okay, so that's about it that I'm looking for as far as those 4 products. Just looking across, some of the other things on the quick sheet here. Gold has been one that is getting a lot of attention, and you can see that they are in a balanced, what I call a new bullish posture. So let's just go take a look at that real quick. Oh, let's get over here. Go look at the right. There we go. All right. So here's what this looks like. This is a move from balance. Gold has been balanced for quite some time. This is the move from balance. This is likely not done. Okay, so what we're looking for is early responsive selling to be long, and the question is to where. This week we're looking at a high of 26.49. So let's go out and look at a longer. Whoop. That's a 5-year weekly chart. It's quite a bit out there. So for the week, we're going to be, I think 2,700 is where people are liking to go. You can see how we're moving from balance. Now, be on guard against a test. A test would be that we would quickly revert back to value. So we should not see gold back below the key balance area of 25.45, or selling could ensue. Okay, so we want to see some nice responsive that does not get back inside of this range and certainly does not return back here, or we could open the door to the downside. That would be a test. So when you break for balance and come back through here, that's a test. We should not be able to get below 25.65. That would be where we'd look for some early responsive opportunities to buy some more, but definitely holding. On Monday, watch 26.05. If you're above 26.05, should be pushing towards, looking for, on the quick sheet, we're looking for about 25 points. So we could go to 26.30 on Monday easily. If we're below 26.05, then we could pull back, tag this point of control at 25.80 before we see buyers step back in, but wouldn't want to get much below that. All right. That is about all that is of significant interest to me as we come into the week. We are seeing Bitcoin kick up a little. They're also in a new bullish posture. So any of these that are like new bullish postures, that's the same plays that I just outlined in gold. Watch the treasuries. They're all balanced with their 5-day. So that means they're going to be moving from there. If they move from the 5-day, they'd be going back towards the 20-day to balance, and getting ready to roll a bunch of currency futures. Should be a spicy day, spicy week. Okay, gang. Well, that's what we're looking at for the week ahead. Again, maybe fairly muted and balancing before we get to FOMC, and then see some significant moves after that. We'll see some people hedge up as we get into the end of the week and we get in through triple witching. After triple witching, markets will start to open up a little bit until they start to hedge more as we go into the election. We'll see whatever that reaction is going to be after FOMC, and we'll go from there. All right. Hope that this has been helpful. What else do we have out there other than just a reminder that all of this is narrative that helps set the context for what playbook trades may be in play. So we're not trading these narratives. we're looking at this and say, oh, we're balanced in the equities, or oh, gold is definitely got a bullish bias to us. So where can I then find a playbook trade that I could express within inside of that? That'd be a good place to go. If you have any questions or want to know more about playbook trades, you can go to TRADEWITHPROFILE.com/4questions. Reach out to us on Twitter, or X, as you would call it. If you want to schedule an insight session and just do a review of your trading plan, happy to do that. I do those complimentary ones of those each week. And for those who want to do some more deeper dive into both either getting better at your narrative planning or actually building your playbook, you can check out our pathway on the website. All right. Well, thanks everybody. Thanks for watching. And we'll talk to you for the daily outlook on Tuesday. Peace.